Welcome to the January 18th, 2021 Advance Report for McGowan Group clients and NetWorthRadio.com listeners, where you can find the long play program that goes with today's YouTube, NetWorthRadio.com. I'm Spencer McGowan, President, McGowan Group Asset Management, your financial weatherman, with your weekly update on the financial markets designed to take your expertise and prowess to the next level in making great investment decisions. They say, as January goes, so goes the rest of the year. And how did January go? Well, so far, the first 5 days are considered a bellwether, a wind vane, if you will, for the rest of the year. This is the first 2 weeks, obviously, but I wanted to cover the top performing sectors so far this year. This orange line, that's energy. The Pipeline Energy Infrastructure Index up about 15% so far this year. And then we start to see the other categories that have performed well. Financial services, you know, the Texas banks with the $53 barrel oil, Texas banks are up about 15% so far this year. Wow, that's strong. Now, the other sector I'll point out, about a 3% gain in the healthcare index, the S&P healthcare index. These are the S&P breakdowns of the different sectors. Real estate about to take some knocks here in the first half, down 2%. I would wait on real estate till at least December is kind of our decision. We love REITs, we love dividends, but I like them 30% cheaper, by the way. All right, this is the Dow 3-month. I'm just showing 90 days here, hitting 31,000 before retreating back below 30,700. The stimulus, if you said, what is this? That's stimulus Xanax. You heard the headline, stimulus package 1.9 trillion being discussed by the incoming administration. Well, that was the impact right here. And now we're starting to see kind of a Xanax hangover, if you will. And we've got more monetary discussion coming up here in just a few minutes. Here we go. So that's the healthcare sector, 3-month, also strong. The next sector, this is the pipeline index, very strong start to the year. That sector, of course, energy leading this year. Federal Reserve balance sheet. What is the Federal Reserve balance sheet? On the balance sheet, that means the Fed has electronically printed currency. And you need a certain amount of currency, otherwise you'd be in bizarre decimalization if you do a transaction. So, because if you only had $1 outstanding, everybody had a tiny piece. But is 8 trillion too much? This is almost 7.5 trillion from a balance sheet that was 4 trillion. And of course, that expansion came from 1 trillion. Then we had the crisis of '08. They pumped the money in here, and they've doubled the supply of dollars essentially in the open market. You and I would think, okay, inflation, right? You got twice as many dollars representing the same stuff, and that is a consequence that we're starting to see. $53 barrel oil is one of those inflation marks. That may not materialize, but the CPI this week, 0.4%, that's an annualized 5% inflation rate Fed target. They said it used to be 2, now they probably need 3 because there's the outstanding debt. Modern monetary theory says you can just borrow and print as many dollars as you want, and people like dollars, and so then you could just spend that money. Well, we know there's some consequence coming. So this is almost 28 trillion in debt outstanding, Treasury debt. What are the consequences of that, and what does it mean for 2022 with potentially higher taxes and more regulation? Well, we're going to cover that with Dr. W. Michael Cox. You go to NetWorthRadio.com, you'll see his bio there, and the interview covers some of his expertise as the former chief economist of the Dallas Fed and a teacher, a devout teacher at SMU, the Bridwell Institute. You'll find out more about that in SMU's recent successes for those of you that are SMU grads. I'm Spencer McGowan, President, McGowan Group Asset Management. Thank you for joining us for this week's YouTube, and be sure to subscribe. Send it to your friends that ask you, what do you do for good financial advice? We'll be grateful for the subscriptions. YouTube McGowan Group. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week networthradio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures: value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.